All right, so this is Chapter 8, homework problem number 7. One of your classmates had a couple of questions about this problem, so I figured I would post a video. This is a great AMT problem because it deals with the AMT phase-out, or the phase-out, of the AMT exemption amount. So let's get rolling. So we've got Janet and Ray, and they're married filing jointly. They have 5 dependent children under 18. They have taxable income, that's important to us, of $2,450,000. They itemize their deductions, that's important. They have state income taxes, mortgage interest, and we are asked to calculate their AMT. Okay, so our starting point, whenever we go to calculate AMT, is regular taxable income, and their regular taxable income is, I'm going to slide it this way just a little bit, is $2,450,000. And now what do? Well, now we have what are called our add backs for AMT. So what type of things get added back? Remember, you only add back certain items, and you only add them back if they get deducted. So over here, let's make a list common AMT add back items. State taxes, property taxes, standard deduction. Those are your common AMT add backs. And what do they have that is on that list? Well, they have state income taxes. And remember, you only do this if they deducted them. And it says they itemized their deductions, and they had state income taxes of $10,000. So we have to add that back. So what does that give us? Then that gets us to our alternative minimum taxable income, otherwise known as our AMTI. And that gives us $2,460,000 worth of AMTI. Now, the next thing we need to deal with is our AMT exemption, okay? And so what we're going to have to do is we're going to have to calculate that exemption. So I'm going to change color here. So we need to calculate that. So our full exemption for married filing jointly is $111,700. All right, but remember, it phases out, and so let's figure out our phase out amount. All right, so to figure out our phase out amount, we're going to take our AMTI, which is 2,460, and subtract it from that beginning phase out amount. And remember, you can find this AMT exemption amount in your Chapter 8 schedules. Okay, so our overage then is 14394. And remember that our phase out is 25 cents on the dollar. So multiply that by 0.25. So that gives us a phase-out amount of $359,850. All right. Now we need to look at this amount, because what do we notice? That is larger than our full exemption amount. So what that means is they've lost their AMT exemption. They get no AMT exemption. Okay. They're completely phased out due to how high their income is. All right, so I'm going to have to readjust the size of this a little bit, and then we'll scroll up. All right, so now what is our next step? Okay, so we've figured out their AMTI. We've dealt with the AMT exemption, and we know they don't get any. So now we have to figure out their AMT base. All right. And their AMT base is just their AMT minus their AMTI minus whatever their exemption amount was, which they don't have any. So their AMT base is still $2.46 million. Okay. So now what do? Now we apply their AMT rates. And so we know there are two rates. You get $194,800 times 26%, and the rest of it is taxed at 28%, and this is going to give us our tentative minimum tax. All right, so this gives us $50,648, and then this other one is $634,256. So add those together, and that gives you your your tentative minimum tax. So our tentative minimum tax is $684,904. Okay, which is great. We know our tentative minimum tax. We know our AMTI. We know all of that great stuff, but we don't know whether they pay AMT or not, because we need to find our regular tax liability. And so we have to go to the regular tax rates, married, filing jointly, and figure out what their regular tax liability is. And as you can see, if you look at your tax rate schedules, they're of course in the highest tax bracket, because they have almost $2.5 million of income. So let's figure out what their regular tax liability is. So as we work our way through this calculation, and there should have been, whoops. Okay, can't figure out how to get rid of that box. We're just going to move on. So our total tax in our total regular tax liability is $844,639, and that actually should be $640 because there should be a 50 cents right there. Anyway, this is their regular tax liability, okay? So we see their regular tax liability and we see their tentative minimum tax. So in this situation, tentative minimum tax is less than regular tax liability. So what does that mean? It means their AMT is 0. All right, I hope that helps. That was Chapter 8, homework problem number 7.